Hello YouTube, welcome back. I'm going to be separating myself from cryptocurrency technical analysis here. This is obviously a TA video, and we're going to be getting into the precious metals with gold, silver, and gold silver, or gold over silver, you know, the GoldSilver ratio. I also want to be structuring the videos a little bit differently. I want to give you the meat and potatoes of the video, or as the acronym goes, bottom line up front, as one of my community members so graciously presented to me. So yeah, I'm just gonna get right into the actual entries, targets, you know, the stop loss for these three assets. And then if you are wanting to learn a little bit more about how I got this, I'll go into it and I'll revisit each one, and and you know, it'll be a little more in depth. But for now, I'm just gonna go into the actual setup of each and then continue on. All right, so gold is on daily. We're looking, we are bearish above 1634, looking for a target of 2222 right there, with a larger target of 2314. Silver, we are bullish above on the micro degree 2412, macro degree 1994. We're looking for targets of 3207 and 3316. And gold silver, we are bearish below on the, let's get way lower here, on the micro setups. We're bearish below, hold on, give me the, there you go. We're bearish below 7125, call it, yeah, or 7115. We're looking for a target, I think it was 59, yeah, 59.56. All right, so that's gonna be it for the signal, people. Let me go deeper on into where these setups actually come from. Let's get to the daily on gold. All right. Firstly, I'll show you the larger setup, the larger degree setup that we are coming close to reaching. Let's go to the monthly, okay? It's that fucking much bigger of a setup. I mean, we could chart most likely from whatever number it is down there. I mean, this, yeah, maybe in log scale, it'll look a lot better. Oh, even no, it didn't even reach it. So anyway, so I digress. So here's the 50, you know, that we reversed right at. It's perfect entry for fucking JP Morgan or whoever it is, all the big banks that are hoarding all this precious metals. But it's just from, the anchor is what is it, the 2000 or 2001 low to the 2011 high, and our entry is 2015 low, and here we are breaking all-time highs. For the nested setups, or the nested measure move, excuse me, from the 2015 low. Maybe I can go out a little bit more. Yeah. Oh wow, I need the week. Fucking A. These are huge setups, you know, huge setups, and we're entering another weekly setup here. Here is the 50, 1, 0, 100, 618 entry target. We had extension setups here that I'll actually show you. This was 1 extension, met target, 2 extension, met target, and then it broke right there. So that dump went straight into a front run of the traditional series measure move that eventually met target right there. Okay, so and there was even extension setups all the way up from this massive pump, but as we come back down, it has entered the traditional series from this low and this high, and we are at the 50. Let's get back down to the 9 hour, because it's really readable for this specific correction. The channel, I'll draw this up for you. This is how I draw them every single time. We have, you know, pivot 1. We're looking for pivot 2 here. I don't care about these pivots. Only these are the ones that are defining essentially correction for me at this point. I mean, what, you know, and you could ask the question, why choose those pivots? Why not have something like this as well? I mean, you can. I'm watching it. I'm making sure I'm aware of that. That channel as well, but hey guys, sorry, my microphone just died. So So let me get right back into it. Let me not take any more time. Had to restart and everything, but right. So the channel, we had the other channel, the first correction channel here. I took that off for ease of viewing because we know that we have a good reaction off of the median line. This is another one that you could be paying attention to for sure. I'm not saying don't paying attention to it. It's just the reactions that we're getting from the other one, the smaller one, and well, just I'm not an Elliott Wave trader. I've learned Elliott Wave. I went to Trade Devils University, or I attended. I didn't go anywhere. I was on the internet, but three-wave corrections is something I see that all the time. These channels work bloody well with three-wave corrections. So anyway, the only thing that I'd be expecting if we do break this, I mean, we could totally, this channel 100% we could get another low, and this price could be following this channel, and we'd be looking for something like this. Essentially, let me draw it out. Maybe they get a little pump up to this, and then just blow right there to the target of the short as well as the second entry, and then sure, yeah, we'll get the pump, as long as we actually get the pump. But if that does happen, let me get this back. If this does happen, and we get something like this, what I'd be expecting is, yeah, something like this. Excuse me. Let's just assume that this is all an assumption that it'll reverse price right at price target. But yeah, we can start to develop a roadmap of what might potentially happen if we get a few things. With if price reverses the targets, we don't get too much overperformance or underperformance. Yeah, we'd be seeing something like this, maybe, I don't expect that it would break the actual series, though. If it does, then we'd be revisiting larger degree bullish setups. But for now, with the information that we currently have, I'm following this channel. Yeah, because we've already got multiple lows, and this is essentially another. I want to call this a stop run, like I said before. Looks good. So let me get the silver. Sorry, that little mic dying kind of disrupted the flow. And look, yes, we're already pumping on silver. Okay, yeah, market just opened like an hour ago. So for silver, we'll start from the low. Where we at? We're 9 hours would be good, or maybe about 3 hours. I was talking to a friend last night. He was asking me why I chose the 3 hour and 9 hour. I say because I'm obsessed with the numbers 3, 6, and 9. And also my other friend told me that your time frame degrees should be at least 3 to 1 relative to each other. So there's 3 minute, which is 3 to 5. 15 is obviously 5 times 3. So it's a 5 to 1. Then there's a 4 to 1. This is 3 to 1. 3 to 1. This is actually not 3 to 1 with 9 hour and daily, but sue me. So from the low, you've got the first traditional met target here. Eventually went into immediate extensions, and that met target that could have went into an extension here, and that was a trade, but it went straight. It just went down to the expanded extension, and this is actually where I entered originally. I don't want to bring it up, but yeah, I think somewhere around here is where I entered. That obviously pumped. We went to another extension here, okay, and then oh god, let me not spoil the story, as we all know though. Then it's another expanded extension right here off of this previous setup, and that's where it just went parabolic. So what we're at now, I can actually go to the 9 hour at this point. What we're at now obviously is just an expanded extension off of this. Now there was, as you saw before, oh no, that was a different attempt. There is this. Oh, what am I doing? Wow. It just blew me away how small, this barely got stopped out. Okay. This would really upset me if this happened and I wasn't already, long from down here, and I was just entering and I got stopped out here. Oh god, it would drive me crazy to see the subsequent pumps. And then even the not breaking the high. I mean, sorry, excuse me, not breaking the low. Yeah, that would get me really I definitely would have entered bullish setups otherwise because the channel looks good. But I digress again. This extension could be the first extension. Actually, no, the first extension was from here to here. I can draw it real quick. That's 1, and then this is 2, and then this would be the next one, but it obviously got stopped. So then we just go back down a degree in terms of the series, and there's the setup that we're in right now. So in terms of the nested setups, we can go down a little bit further. It's just obviously this one met target and it dumped right at. Oh, excuse me. This one met target from here to here. This entry, and then here's the target. This is all the Wall Street bets. This was like the SLV Wall Street bets was pumping it, or that's what they want you to believe. And then there's the subsequent dump that just tests this high, and we're now trading above it. So I definitely see silver just going for it. Especially me, and it's got so many, it's got good targets above. I went over it before, but 32, like I said, 32.07 and 33.16. Now, the gold-silver chart. The gold-silver chart, like I said before, is I think it's just as relevant to a precious metals directional bias. Well, I guess a gold and silver directional bias as it is to the actual gold and silver chart. Because it, obviously it gives you more of a relative understanding of what's going to be moving faster, farther, faster. And historically, silver does that. Silver moves further, farther, faster. Whoa, I didn't want that. Anyway, so from the high, because when we're trading bear setups on this, because silver is moving further, farther, faster against gold. So that means that the price of gold relative to silver is going down. Or excuse me, the price of oh wait, no, that's right. Price of silver or gold relative to silver is going down. Gotta get it together, bro. Here we've got an extreme front run of the first traditional. I don't normally, it locked in the pivots. I would not have entered here. I would have waited for the 50. But from there we got the target reach. We have the extension, expanded extension. And then we broke through the profit target again. We get our first extension right here. It was a lot of volatility right here. So it did actually enter at this 382 right here. Met target, wick target. Then there's the subsequent expanded extension that was just, that's volatile. That's fucking insane volatility right there. From the target to the next entry within 2 candles, within 24 hours. Crazy. And then that obviously dumped, met target, reversed right at target. That locked the pivots in terms of, oh no, this is an extension. So that did enter right there. Same kind of thing there. Went and entered, but we did break the high. But because the extension is entered, we're, even because it pumped after here, we wouldn't use this new pivot. Just look at, it also gives you confidence because this 618 reversal right there. That eventually met target over here, and these nested setups is what I was tracking on the way down. I think, yeah, here's the first. That was straight to 50, dumped, right at target. That just kept going. There was no extension. This was an extension, but it definitely, it obviously didn't make it. So I went to the traditional series, short. It was a front run, and then kept going down. And this is the reversal. This is the target for this setup. This is a reversal of the larger setup. It's actually dumping right now because silver is pumping against gold. The market just opened about an hour ago. Like I said, if this price pattern, or if price just is going to break below this setup here, that basically the 64.55, and it's also going to break below this lower boundary of this channel while it's making a bunch of new lows. Silver is just going for it. That's just I'm calling it now. Silver is absolutely going to fucking go for it. But we could just be getting a shakeout here early in the week. It's not a real trading day. It's only it's like an hour into the trading to the opening of the week. But we could be getting a pump up, and that would break the nested setups, which we would expect. I think I said this before, but either way, we would expect the bull setups to take us up into the larger degree expanded extension, which will take us way lower. But it's either we get taken up in the bull setups or we just keep dropping like a rock, which I think probabilistically has a little more effect to it. That is basically everything. When it comes to the gold and silver, I was going to go into more why I chose the gold and silver chart, like why is it relevant. Obviously, you can chart it with the setups and everything like that, but just looking at it historically, I think I can actually bring it up super fast. Yeah. Looking at it historically, the gold to silver ratio, I mean, there's just really, it's block data here. Before the 60s, this low here, 68 we'll call it, or maybe even a little earlier, 67, 68 was absolutely relevant to the price of, let me see if I can bring it here. Yeah, here's 60, where's 68? Look, that's 70, what is this? Okay, here's 60, 67, 68. So there was another low after it, but the reason this is important is not just the one asset, it's the other, it's including silver in this as well. So here's the low, so gold was low and it ended up breaking another low in 70. So we'll remember that. And then yeah, there we go. Here we're 60 or 70, 68, 67 and 68. So there we go, 67 and 68. Gold, silver pumped almost 100% against gold's dump, okay? And so what is that? What do we look here again? Oop, I don't want that. We look here again. That was a low, okay, in a really significant low in the gold and silver ratio. So this is only one of one, but we can start to think, okay, whenever the gold silver ratio gets to a very relatively low number, let's say below 20, we can start thinking that the gas of the farther, faster train for silver is running out of steam, and there might be either a significant reversal in the entire precious metals market, or gold will just pump higher than silver. But anyway, let's get back to the next pivot. So then we have a high, right? Let's go to the extremes. The low in the 60s, and then we have the crazy high in 1980. Okay, and then what was price of silver in 1980? 120. I didn't even know it went that high. Wow, really? I've only known the 50. Sweet. 120. Where's the gold to silver ratio? So here's the high of where's 1980? 1980. Oh wow. So here we go again. 1980. I mean, this is specifically the beginning, so let me make sure that's January 1980. Here's December 1979. Basically January. Yep, there we go. January 1980 for gold. What is this? This is December 1979. And where's January? January 1980 was the absolute high again. So we're getting more confluence into feeling good about why this specific chart or gold silver is going to be relevant to our overall directional bias. When it reaches a certain extreme, one of two, well, there's I think the two things that are happening. That one is there's either an extreme high or low in the overall precious metals market, or well, that's actually it. It just correlates the high and lows in the market, doesn't it? And the best part about this is knowing that silver does it further, farther, and faster, so it makes more relative to gold. And so that's what this chart's really telling us. When it comes to the actual relative high and lows, like the really big ones, here's 2011. Where's 2011? Oh, all the way at the top. So this is when it was saying that gold is very expensive. Oh, no, sorry, this is the gold price. So the high of 2011 was a really significant low in the gold silver chart, and the price of silver in 2011 was a lot higher relative to the price of gold. I've just droned on here. So I might even fucking speed through, but in terms of speeding up, anyway, I hope that wasn't too long. I might even edit it out, I'm not sure. Like, comment, subscribe. I appreciate you guys watching. Please just come to my Discord and get all these setups and these. This exactly what I'm talking about here. I gave this information. What was it? I think 24 hours earlier. Yeah, right here. Here's what is it? 23 hours ago. This is an entry that I gave yesterday, so you could have been a whole day before the wave. And with the way price is going, I would be expecting a pump really soon. I mean, look, it's literally pumping at market open. So if you want to get in on these setups before everyone else, come to my channel, come to my Discord, come follow me on Twitter, on TradingView, anything, so you can get these before anyone else. All right, guys, I appreciate it. Have a good day.